Yep, Andrew, that's what I'm going to talk about right now. Okay, so we're going to look at NXPI, and I want to discuss how we evaluate, how we look at how much premium is left in a position. Okay, and what we do to kind of evaluate how we monitor an existing position like this. Okay, so let's take a look here. At NXPI. So on what day did we buy this? Let me check here. Okay, on August 19th, we bought the September 20th 105, 110, 115 call butterfly, and we paid 75 cents. Okay, just last week on Thursday, we sent a signal and we got filled in. So on August 5th, we sold half our position for $1.30. Okay, currently the stock is 108.5, and our spread, our butterfly, is trading about $1.65. Yeah, Tom, that would be, it'd be hard to get in something August 19th and out August 5th, right? Thank you. So that is definitely September 5th. Okay. So, first off, what do we do? Obviously, this is great. Okay. And secondly, how do we determine how much intrinsic, how much extrinsic value is in this thing, and really what we do from here to kind of evaluate where we may want to exit, where we may want to wait, etc., etc. Okay, so what do? So first off, can anybody tell me how much premium is left in the value of this butterfly? How would we determine that? Anybody? Subtract the intrinsic value from the, well, which option? John, which option? Okay. Look at the short strike. Okay, at the money. Okay, good. I'm glad that we're having this discussion. So the way we need to look at this is if this were expiration, next week with the stock here, okay, what would be the value of the butterfly? So if this were next Friday at expiration, and the stock was still 108.50 right here, what would this butterfly be trading? Anybody? How do we determine that? Everything you need to know is up on the board here. Good. Good. Yep. Nope, Pamela, I don't have to, and I'm not going to because I want you to learn just from what's up on the screen here. Because everything we need is up on the screen here. On the whiteboard. Okay, good. Why do I say good? Well, the 105 call, okay, the 105 call with the stock trading 108.50, whoops. Will be worth how much? Glenn, Brock, Barry, Avi, you guys all got it. Well, Barry or nickel off, but that's okay. The 105 call would be 350, right? Everybody got that? Sorry for the scribbly line up there. Well, Pamela, if you have the 105 call and the stock is trading 108.50, what's the difference between the strike and where the stock is trading? Okay, so remember, no premium, right? No premium at expiration. Only intrinsic value. The intrinsic value would be 350. The other two calls, the 110 and the 115 calls, would be worthless, right? Because they're both out of the money. So then the value of this butterfly, if the stock were right here at expiration, would be 350. Okay, well, if we know it would be 350 at expiration, but it's only trading $1.65 right now. God, I don't know why this keeps happening. This happened on Friday too, when I kept doing this here. Let me refresh my screen here, guys. Hang on. This is just my screen. You should still be able to hear me. Okay, you should still be able to hear me. There we go. Hopefully that does it. So if we know it's going to be worth $3.50, but it's only trading $1.65 right now. Oh, don't do this to me. Come on. All right, guys, hang with me here. I am going to reproject. So hang with me. You should still all be able to hear me here. Can you guys see the whiteboard right now or no? Great. Okay. So if we take the 350, it's going to be worth less the $1.65 it's trading right now. How much premium is left there? Well, that's $1.85. So that's how much premium we have left to make in this butterfly. This is, oh man, as frustrating as it is for you guys, it is that much more frustrating for me right now, what is going on here. Okay, so $1.85 is how much premium is in the value of this butterfly right now. Okay. How's that, Pamela? I just put premium value up there. Okay. Now, what can be the max value of this butterfly at expiration? Okay, what can be the max value at expiration? Thank you, Glenn. $5, right? If we go right to the short strike, $5. How would we get to $5? Go right to the short strike. Okay, premium goes to 0. Our long call spread in the butterfly maxes out while the short call spread goes to 0. Okay, so what does this all mean for our position? Stock needs to go to 110. No, Pamela, if the stock goes down, what would happen to the value of our long call spread? The long part of the butterfly. What would happen to that? Remember, butterfly is just a combination of a long spread and a short spread. Right now, our long spread is what's making us money. The 105, 110 part of the butterfly is what's making us money. So 110 obviously is the best spot for us at expiration. But what happens between now and then? You know, what if the stock doesn't go up? Right? What if the stock goes down? Okay, we have at this point a slightly long delta butterfly, right? Because our long call spread part, the 105, 110, has more deltas than the short 110, 115 call spread. So what if the stock goes down between now and expiration? Or what if the stock keeps going up, but keeps going up and flies way past the last strike, the 115? Right? Well, that max loss would not be likely, but listen, if the stock were to be 130 at expiration, yeah, the butterfly would be worth 0. Okay, so it's a matter of, remember, is this a trade or is this an investment? We're doing great with this right now. Okay, that first part that we took off was for 70% profit. Right now, we're at well over 100% profit on the second part. A stop exit would be the ideal situation. However, it's hard to do a stop exit in a butterfly that's not in an Apple or a Microsoft, where the markets are so large and so tight. So I'm afraid that if we put a stop exit out at, $1.25, $1.30, that if the stock just ticks down just even a little bit, we could get stopped out and not really want to be stopped out. Okay, does everybody understand that? So in terms of managing, what do we do? What is our optimal exit strategy for the balance, for the remainder here? Would we just say, okay, let's get out at 170 and we'll take it and we'll move on? Do we want to wait for $2? Do we want to wait for an arbitrary number at 250? Right? It's really, we're in a great situation, but there's no scientific or certain way at this point to really determine what the optimal exit is, other than just saying, well, if this were expiration next Friday, we know what it would be worth. So I look at the chart here and look where NXPI is, guys. Okay, we're trading right, literally almost to the penny of the high that it traded right here back in May, or late April. Okay, this is significant. This is very significant, because if the stock can get through here, there's probably a lot more room this can run. Okay, so Drew, that's the same issue. We can say, okay, if the stock backs off to 106, we want to exit. However, we don't know exactly what that exit's going to be, because the market is going to be quite wide. Because there's 3 options involved, 4 total when you include that there's 2 of the shorts. And we could get stopped out on a bad stop market. So we can have a mental note saying, all right, at 106 or 105 and a half or 107, whatever it is we choose, we can have that mental note to say, okay, that's where we want to, think about getting out. But we don't want to have an option price tied to where the stock is trading. Okay. So what I'm thinking is here, guys, we watch this really closely at this area here. If it can break through this resistance where it's trading pretty much right now and sustain, it should keep grinding higher, which would be a great thing for us. A grind higher would be perfect for us. So that's what I'm looking for. Okay? But what I really wanted to discuss during this was, how do we figure out the amount of premium that's still left in this trade, still left in our position? Is everybody clear on that? Okay, good. All right, let me wrap this up, get it posted up in the room. I am actually heading down to the floor. I'm going to be on Yahoo Finance for the first of 2 interviews today at 11:30. All right. Thank you, everybody. Let me get this whiteboard posted here.